So you could see last week was similar to FTSE. We've got a big bear bar, except this is a little bit better for the bears on DAX because we went above a buy signal last week and then we've closed on its low. Hi everyone, my name is Tim Fairweather and welcome to the DAX 40 weekly futures report. This is our new format. We're trialing out instead of writing them. So let us know in the comments what you think of it. So you could see last week was similar to FTSE. We've got a big bear bar, except this is a little bit better for the bears on DAX because we went above a buy signal last week and then we've closed on its low. So we've triggered bulls that tried to buy above, and now they're stuck in a losing trade. On the cash chart, we didn't quite make 19,000, but on the FDAX, the RTH chart, we did several times. So we're heading back to the moving average, which is around about 18,500. We've been in this range, 18,000 to 19,000, markets deciding what to do. So we had a broad bull channel, and then we had a bull spike and channel up, couple legs up, and then lower high double top, which was confusing. Then we went up to a new high. So you can see we've gone higher low, lower high, lower low, higher high. So it's a kind of an expanding triangle. One way to think of it is if you ever have more than 4 reversals, here 5, I think of it as breakout mode and a bit of a no-touch situation. It means the market is forming a range which is going to break out of it. And I think it's going to improve the hit rate, waiting for breakout follow through, pull back, and then take the trade in the next direction. So what do you do here? Well, bears did something good. They closed a strong bear bar below the low, below the moving average for the first time basically first time all year. And then bulls immediately bought it. I think a lot of bulls were looking to buy the moving average and were waiting for a close. I think some would have kind of panicked with that level of close down there, and it kind of just rocked down to those lower targets, testing the dojis below breakout points and where the double top where we broke out of. And the bulls just took over, 10% drop, higher time frame, longer time frame traders bought it up, and they got a really good trade right up to the high of that channel. And I think if you're day trading this kind of pattern, then that's the trade. You've got a pullback entry, your targets to the high of that channel. So they got there, and so this is profit taking from the bulls. I think in terms of what happens next, well, if we close on our low going into Monday, then we're expecting a gap down. But these bars are incredibly strong, very different from anything in here. So this should get a second leg. Although now we're back in the middle of that range, that second leg can also be sideways. So I think that we're going to continue in this triangle. But we're right in the middle of the range, and that can be violent. So is this a sell signal? Well, you've got a bear surprise bar closing above the moving average. So I think it's a layer of support in here. You had bears selling, scaling in higher, and then you've got bulls buying lower. So I think we're going to go sideways here. So what would be the surprise trade? Well, bears getting a second big bear bar closing on its low. That actually fits with the expanding triangle pattern. So rockets up to the top where everyone wants to sell, rockets down to the bottom where everyone wants to buy. There's an argument for traders selling because it's a bear microchannel, selling above the high of that bull bar, even though I wouldn't recommend it. It's such a strong buy signal. I think the hit rate on that's not worth it. Wide stop. So where else would you be a bear? Well, bears selling above that bear bar. Any of these bear bars and at that high, they've all made money. So if you're in an environment where limit order bears have made money, then it's not a good environment usually to buy above the high of anything. So I think we're going to go more sideways here, halfway between 18 and 19,000, 18,500. So expecting sideways to down next week on the weekly chart. And on the daily chart, you can see that a little bit more clearly. We had what I call the highest high one. So at some point, you're going to buy the top tick of the day. You buy one tick above a bull bar and a bull trend, and that's the high. You sell one tick below the low, of a bear bar and a bear trend, that can be the low. But usually those traders can get out. And that's what I think happened up here. We went up to get near 19,000. We let those bulls out, and then there was no one else to buy up there. So you had bears with a strong spike down, trying to sell at the moving average for second leg, failed, they got stuck. Some would have taken the loss here, which is the breakout and follow through, which is why we trade that as a breakout. Other traders will trade small, expecting to sell higher and scale in. And these trades will be at a heavier size. And you can see a lot of those traders are now making money. So just as we saw on the weekly chart, on the daily chart, there are limit order bears making money. And you can see in 4 bars, they've undone, 3, 6, 9, 12, nearly 2 weeks worth of a tight bull channel. So I think these were low probability buys in terms of a limit order. Putting your order 1 tick below the low of a bar. There's just too many bars in that micro channel. It's climactic. Everyone knows it's running back up to where all the sellers are. And so you're either in it for to get your target at the high, you're having a shot at a new high, or you're waiting to sell. As soon as the bears got bear bar follow through, sell above, sell below. And looks like we're heading back down to where those bears got trapped. I think this bear bar here, at the time I thought this was going to be a good sell above that bear bar moving average, but on the day it was just incredibly bullish. So there's just no need to go short with so much strength there. Well, as I said on the weekly chart, if we end the week closing on its low or closing on high, then we're expecting a gap in that direction on Monday, which could happen. It's right in the middle of a trading range, so I think it's difficult for traders to trade this on this chart, but it looks like sideways to down. So thanks very much for listening. Really appreciate it. And please let us know in the comments what you think about this format for the weekly reports. My name's Tim Fairweather. Happy trading. Cheers.